Hello, Seasonal Vantage Insiders, Alex here. So the date right now, it is 23rd of September 2024. As I'm doing this video, the time now is about 4 p.m. So today doing this video a bit late because, afternoon I had a dental appointment. Then at 3 p.m. I had a Zoom meeting. So only got the time to really sit down and do this video for you. So just a very quick recap over there. So last Thursday, I did a webinar for the SVI. So the replay, it is already in the members area. So just in case, okay, you somehow don't know about this webinar or you haven't got the time to watch the webinar, okay, do spend some time to watch this webinar, the recording. It is inside the SV members area over here, okay. So it is under the latest post, okay, the latest post under the SBI members only webinar that was done on the 19th of September. So inside this webinar, I mentioned a few things over there, okay. So the main thing is that, okay, I go through with the members, okay, how I actually enter using the wash and rinse trigger, and also I talk quite detailed on how I use the stop loss indicator, okay, under over there the stop loss and profit calculation using the ATR. I spent quite a bit of time over there, and of course you want to access to the indicator, it is over there. And I also talk about this new tool that I developed, the 1 month and 3 month high-low breadth indicator using the New York Stock Exchange, okay. Once again, you want to have a more detailed understanding on how I use this indicator as a breadth indicator, head over to this link over there, and of course, watch this video over there. So in case you want to, somehow cannot find the video after subsequently, right, always head to the webinar tab over there. Then all the previous 3 webinars will be here so far, okay. And of course, it is good that for the newer insiders, if you haven't watched the rest of the 2 webinar, it will be good to watch also, so it can reinforce a lot of this knowledge content are evergreen, okay. A lot of focus on the stop loss, the profit and the trigger and such, okay. And the usual weekly update, okay, the latest post over there. So last week, okay, I mentioned about this midweek update, okay, and this one did not trigger. So not this one. It is actually, yeah, this is the one. The watch list for last week, for example, I exited the FANG, the Diamondback Energy, and also the CVI. All right, so all these are also posted in the Seasonal Vantage public group as well. So for example, under the member success, I can also see quite a number of you guys enter into this oil trade and also the energy sector trade. Of course, I think some of you also shared the CVI and also the FANG as well. So fantastic. So you guys make good profit, okay. And also I talk about this corn. So the so-called the not so good news is, okay, I get stop out on the corn. So this is a proxy. I use the corn ETF over there, okay. So last Friday it was pretty bearish, okay. Corn ETF is CORN, this Tilcrum Corn Fund ETV. So after that, once again, you see, even though I thought that it is pretty good, okay, but once again, this pin bar is causing a huge problem over there. So, in hindsight, again, once I should not enter based on this, I think William was asking me about this pin bar. See, once again, not so good, but as of now, it still hasn't hit the so-called the swing low over there lah. But if you right now looking at the corn futures right now, it is doing quite okay. You can see that, once again, price hit this CPR and then rebounded up again. So I'm still looking at corn, okay. So I get stop out. So that's the reason why I said your reward to risk ratio, it is very important. So you can see over there, based on the member success, I posted the 2 trades that I've done. So over here, like for example, I posted the FANG, so I get a 1R profit, and I also showed the CBR Energy with a 1.5R. So you can see that, so both the CVI and FANG, CVI I get 1.5R and then for the FANG I get 1R. So net total it is, my profit it is 1.5 by plus 1R, it is actually 2.5R, right? So I lost on the corn ETF. So that is I lose 1R, correct? So 2.5R plus 2.5R minus 1R. So net I still profit, okay, plus 1.5R. So which means that at the end of the day, all right, you can lose half of your trade, okay, you are still profitable if you manage your reward to risk ratio well. So that's the reason why I said during the members, not members, the members only webinar, try to have a reward to risk ratio above 1, preferably above 1.2, and the best is 1.5, okay. All right, that's what I do lah, okay. If you can get 2 and 3, that's the best for you, but a lot of times, okay, can't in a clean swing, it is very hard to get above 2R reward. So I think 1.5 is good enough. I mean, you can see over there, right? It's just nice about that. You can see that CVI, this CVR, right? You can see that, you know, after I hit 1.5R, you know, somehow the market start to come down already, pull back already. So 1.5 is achievable. Okay, 2R and above a bit tough for clean swing. Okay, all right. So back to this week update. Okay, you can see from the zero gamma level, from spot gamma, you can see from here, okay, the zero gamma level, it is at about 5,650. You can see that the last close is about 5,007. So you can see over there, SPX 500, S&P 500. Okay, right now, the last closing price, cash index, this is the cash index, is about 5,007. So 5,650, it is here, okay, the zero gamma level. So once again, you know, we are about there. And for the past 2 weeks or so, okay, the market had a tremendous rally, okay, after the mid-September, there was also early September, there was a kind of a sell-off and then continue to go higher. Okay, so if price level can stay above 5,650, then, you know, there is less volatility, okay? And if price is below 5,650 on the cash index level, then we could expect probably more selling and more volatility to come. And of course, you know, last Friday was actually the OPEC's options expiry date, okay? So the triple witching day. So right now the OPEC has finished, okay? So the options market is free to so-called roam again, okay, to do whatever you want to do. So typically, if there's weakness to come, typically is after the OPEC. Not always, but typically it is like that. And looking into that, okay, I also want to let you know that for the indexes, okay, now that everything is like very bullish, you can see that over the is it the after Fed announced the rate cutting, right? Everybody is like, wow, going higher. Is like right now, it seems to me that the sentiment is a little bit overly bullish. So if you look at the S&P 500 futures, that was the, you know, Wednesday, then Thursday, you know, that kind of bullishness. So go up, sell off, then Thursday go up again. Okay, so overall, you can see that for the past 2 weeks or so, it is very bullish. So, but you know, if you look at the market breadth, so once again, nothing new over there. This is from the decision point from stock chart DP gallery over there. If you look at the market breadth, percentage of stocks above the, where is it? Above the 20-day, 50-day, and 200-day MA. This is EMA, it doesn't matter, it's almost the same. Okay, you can see that right now the market, it is more gravitating more toward the high side. You can see that it is at about 75, 80 already at a high side, okay? Percentage of stocks above the 50 EMA, it is also 80%. It is at the high side already, okay? So the percentage of stocks above the 200 MA also at the high side. Of course, it doesn't mean that the market is going to, you know, immediately have a correction or what, but it tells me that the reward to risk ratio, it is actually not that good anymore. The market can still continue to go higher, but we are about there. We are about there already. And just to let you know, I forgot to take the chart over there, but the second half of September, okay, during election year, tends to be weaker. So for me personally, okay, I am actually more gravitating more towards the short side, selling short of the market. Okay, so for this coming week, right? Okay, let's just focus on the data over there. So the data, okay, in fact, I'm not looking at the bullish and the ETF and stocks, okay, but I need to make myself clear first, okay. It is not that easy, okay, to sell short in a uptrend in a bullish market. So if you don't feel comfortable, okay, or if you feel that you want to just uh, stand aside, okay, it is fine as well. You can don't do any short selling. But for me personally, my personal view, okay, I'm looking more towards the short side right now, okay. All right, and I'm looking at the bearish ETF and the bearish stocks as well over there. So for this coming week, okay, you can see the date is actually from the, because we are nearing towards the end of September already. Okay, by the way, for the fourth quarter, I will try to finish up the data, okay, as soon as possible. Give me some time, okay. Really a bit busy, but definitely before the start of October, I will release the data for you guys, okay. So for this week, okay, typically it's Sunday to Sunday lah, so 22nd until 29th. But since 30th of September is the last day of the month, so I'll push the date from 22nd, the filter date from 22nd until the 30th of 22nd until the 30th of September lah. Okay, so until the end of September. So all in all, I have a few stock that is in mind right now. So the one stock that I have for selling short, okay, bearish trade ideas. It is this Gillette Sciences. Okay, this is under the health, under the biotech. So you can see that it is going higher. Okay, so for Gillette Sciences, okay, for Gillette Sciences, for the bearish stock, okay, let's go and find the Gillette. This GILD for Gillette Sciences. Gillette Sciences is here. Okay, from 19th of September to 7th of October for the past 11 years. Okay, 10 years it has been down during this period, and the calendar days, 19 days average profit about 3%. So for Gillette, okay, I am looking at this. It is at the classic resistance level over here, even though I don't really look so much into them, but hitting a very typical resistance level over there. And you can see over here that we might have a wash and rinse. Let's see how the market do tonight. So you can see over there, Friday, Thursday, and then Wednesday. So Wednesday, it is the day where the closing price, okay, is closed higher than the prior day high. The prior day high is on a Tuesday, 17th of September. That will be the wash line. Will be the wash line. The high, it is 83.34. 83.34. Okay, so you can see that it is still staying above the wash line. On Friday, it tried to dip below, but eventually price closed above the wash line. So let's see whether this coming week or so, okay, the Gillette Sciences will come down. Okay, this is, I'm looking at that, this is GILD for Gillette Sciences. Another one that I am looking at, okay, in my watch list, let me take a look. It is actually PPC. Okay, PPC, it is this Pilgrim Pride Corporation under the industrial sector, agriculture, commodities, okay, milling over there. So it has been in a pretty nice uptrend. To be already honest, I have not heard of this PPC stock, Pilgrim Pride Corporation. Okay, but I can see that it is in a pretty nice uptrend since the late 2023. So it was in a uptrend, suddenly going higher and then going higher and then going higher. So it seems like, it is like a blow off top over there. And previously it was pretty well supported above the CPR, at the cloud support, and CPR above the CPR. So right now, since many months, it was really below the central pivot range now. And right now it is sitting, a pullback, okay, as in a sell off and then a pullback. Okay, not sure whether there will be another sell off leg over there, but you can see that price action wise, just from price action, it doesn't really look very good. This was a pretty steep impulse move over there. Okay, just from a strictly from this standalone chart over there. So there was a wash and rinse trigger actually on a Friday. So Thursday was the day where price closed above the prior day high. The prior day high is on the 18th of September. That is 43.05. 43.05. That was the wash line. You can see that on Friday prices closed below the wash line. So let's see whether this coming week price can continue to go lower. Okay, so this is PPC, Pilgrim Pride Corporation. And the last but not least, only 3 so far in my watch list. It is the last one. It is actually DCI or PPC. I think it's previously last week watch list. So for PPC, right? PPC is okay. 18th of September to 2nd of October for the past 12 years. Okay, 11 years it went down during this period. And the last but not least is this stock called DCI, Donaldson Company, 18th of September to 1st of October for the past 10 years. 9 years it went down during this period under industrial. So for DCI, this is under Donaldson. Okay, you can see that it's a bit choppy, not the best of the best setup. I would actually prefer the Gillette and also the PPC, but this is, you can keep it in your watch list, okay, and then you see whether there is so-called it has a trigger already, whether you don't be so quick to enter into that. Okay, maybe even though technically after the market open tonight you can go for a short, but I will take more of a hold and see approach first. Okay, after 1 hour, at least until 10:30. Let's see how it goes. So anyway, you can see that it is in a pretty ranging way, and then on Friday, it tried to close above the central pivot range over there. Okay, and then on Thursday, price closed higher than the prior day high. The prior day high, it is actually 72.68. 72.68. All right, and then on Friday, price closed lower than the wash line. So let's see, this coming week, price can go lower. Okay, this is not the best of the price action, but it is still a valid setup and trigger, and also of course with the seasonal trend. Just that the price action wise, it is like not the best. It's not like trying to go in a very nice uptrend or downtrend, that kind. Okay, so as of now, I am more gravitating more towards the bearish side. Again, I need to tell you, might not be so easy to sell short now. At the end of the day, I might get stop out, I get some losing trade again. Okay, if you can see from the past few trade setup, more of the losing trade is from the selling short one. Okay, so do be aware of the risk. Okay, because I and still profitable, I want to take some risk. I'm okay to take some risks. Okay, but again, try not to have too many short selling position, short position. Okay, for me personally, okay, at most three short selling position, because if I'm all wrong, okay, 3 times, let's say typically my position sizing per trade is 2%. So if I'm all wrong, okay, I would lose 6% of my capital. Okay, so I would just encourage you, okay, try not to have go more than 3. 3 is the max already. Good if you don't really sell short, okay, at most maybe 2 short position. I think that is good enough. So if the 2 short position are wrong, okay, 2 times minus 2%, okay, you at most you lose 4% of your capital. That's it. Okay, all right, so that's all for today. So the 3 stocks that I mentioned is Gilead Sciences, GILD, PPC, it is Pilgrim Pride Corporation, and the last is DCI, it is actually Donaldson Company. Okay, so with that, stay tuned for tonight usual live stream at 10:30 p.m. Okay, so with that, thanks so much, and I'll see you guys again. Bye bye.